Welcome back, everyone, to another market closing live stream. We've got lots more red in the market at the moment than we had previously. We've definitely taken a little bit of a shift here in the market. It's so weird because really we started this morning out with a lot of articles from institutions questioning valuations and sort of all of a sudden this almost nervousness coming back a little bit. Very, very interesting to see the transition, how we started with articles and negative press. And all of a sudden now it makes sense. We were going from opening up 0.1% to the downside across the indices to being down 0.25% on the Dow, about 0.2% on the S&P 500, 0.7 on the Nasdaq, a full over 1% here on the Russell 2000. So definitely some pain and some uncertainty, some fear coming into the market, some FUP. That's fear, uncertainty, and pain. Yeah, forget about doubt. We got FUP. uh, anyway, so let's go ahead and take a look at some of the things going on in this ocean of red. In fact, you know what? Just for honor's sake, why don't we actually start with the things that are green, because it feels a little better to do that. So we'll start with the green, then we'll look at the red. So we've got Root, insurance company here, up 10.71%. Very interesting to see that we had a big movement in Hippo to sort of catch up with the Lemonade valuation, and now we're seeing a movement here in Root Insurance to sort of catch up. I have looked into Root. I personally think Hippo is a better deal than Root, hence why I have no shares in Root versus lots of shares of Hippo. But hey, full transparency, I might be a little biased on that one. But I wasn't when I made the decision to buy them. Anyway, Cleverleaf Holdings, cannabis company here out of Colombia, up 9.97%. Support.com up 6.27%. Microvast up 4.46%. Virgin Galactic bouncing back a little bit, 4.27%. Upstart just continuing its surge no matter what the heck is going on in the market. Finally got Ethereum recovering a little bit, up to 3,500 here. Hippo up 3.8%. Another nice green day here. Hut 8 Mining finally turning positive again after being down as much as 10% earlier today. Incredible dip we had there in Hut 8 Mining. You've got, at the same time, AMC here. AMC moving again, 1.68% to the upside. Look at that rush right into the close here. You had this run at the beginning. The negative FUP took over. We drop. Rough day. Spent most of the day under the VWAP, only to just surge into the close here. Look at that volume that just came out here on AMC, just out of nowhere. You know, look at that, 1.3 million shares at $48. Somewhere around $66 million worth of volume in 1 minute relative to the, what do we have before that? 82,000 times about 48, relative to the about $4 million. I mean, you've just 12 to 14x your volume instantaneously here, almost, well, within 10 minutes on AMC. So hence the movement here on AMC. Big momentum, unburying AMC from the Red Sea it was in. Domino's up 1.2%. Wow, gosh, 520. It's incredible. Peloton's actually up 1% today. It's been sort of on a little bit of a downtrend. Tesla's actually green by next to nothing, but the fact that it's green is I suppose better than some of the crazy reds that we have here, like Clover. Clover clearly a momentum play. It's very important to know that. Take a look at the channels though that we hit in Clover. Also worth mentioning these here. Ooh, let's see here. Take a look at this. It is worth watching these two lines here. The 716 line and the about 878 line, because these are channels here for Clove. Look how you sit in these channels when it comes to a sell-off. You really don't frequently tend to go much below these channels here, which is really worth noting because every time we get a run above these channels, we seem to pull back into the channels. So for trading purposes, that's worth mentioning. This obviously here, massive momentum, which you subsequently follow that slow bleed out. Very common until you get into this channel over here. We did have a run out, but now we're kind of getting pulled back in with that 12.27% decline. Worth watching. Desktop Metal rather. Same sort of SPAC-y run that ended in February, as with most SPACs. Sort of down now. Lion Electric, another style of SPAC-y run here, peaking out in January. Meta Materials, another momentum mover here. Very similar. You could probably draw those clove channels down here as well, somewhere around 437 and 280. Yeah, 280 looks like a pretty good line here, in fact. I'm going to draw that line really quick. There we go. So you could probably draw these channels just right around here. There we go. So just sort of a quick 272, and what is that, like a 4? Nope, it's tough to tell, like a 431, something like that. Oh, there we go, 450. So worth kind of watching those for momentum players. I think that'll help a lot if you're trading these. Canoe, Build-A-Bear, Nikola, Didi, lots of the SPACs, higher valuation companies getting just destroyed. In fact, if you look just what's up here, all of these, every single one of these, either SPACs or higher valuation, every single one of them. And so you really see that pain here. Yeah. Well, you do have Neo here, though, which is not a SPAC, but it certainly is higher valuation than Tesla, which makes sense because they're smaller. Robinhood almost down to the 39 range. In fact, if we look at the intraday here, it looks like we dropped as low as 39.81 at one point this morning. In fact, that was during the course member live stream. And that's incredible. Let's see here. Okay, so apparently an Adam Aron, CEO of AMC interview at what's it called? Adam Aron was on file, and that's why AMC. That makes sense. AMC and GME doing a partnership? Really? Oh, that's interesting. We'll look into that in a second. Thank you for bringing that up. Is that true? Somebody maybe fact check that, and we'll take a peek in just a moment. But anyway, lots of pain here. Look at that Square coming back down to 254. I prefer it under 230. Not enough. We were talking about this. Oh, for their ad. Okay. We were talking a lot about is this a dip buy or not in the course member live stream this morning. And there wasn't massive excitement about buying the dip just yet. Want to wait to see what happens. Same thing for Enphase, Redfin. We're still going to maintain that RCC. Very, very important. Enphase at 163, getting juicy. This is exactly the kind of direction that we want to go, in my opinion, to have a buying opportunity. Now, short-term painful, but you got to recognize this is an opportunity. Remember, like if you really want to change your mindset in stocks and psychology money, there's a reason it's called stocks and psychology money. Check out the program link down below in that coupon code. But anyway, Workhorse, 257, Shift Technologies, lots of red. Even the recoveries here, it's really almost. I don't think it's discriminate here. This is a very indiscriminate sell-off. It's basically an everything sell-off. And it was almost spawned by the crypto sell-off and the crypto liquidations. And so you have this everything sell-off. And it's when you're in these everything sell-offs, in my opinion, you've got to be careful because we can look at TA for individual stocks. Like, for example, I've got a strong support line here at 157 for Enphase, or sorry, 155 for Enphase. We have the 200-day moving average that intraday we just broke. Once we get under 200-day moving average on the day chart is sitting at 164.37. Enphase right now sitting at, let's see here, 164 is the 200-day moving average, and Enphase is at 163. So we're below the 200-day moving average. Looks like we might close below that as well. We'll see what happens. But this could be, if the broader market continues to sell off for a day, 2 days, 3 days, a week, 2 weeks, whatever, then we'll get much larger discounts. If we start running again, I'm not interested in FOMOing into any of these right here, specifically because we're not really seeing massive discount deals, with the exception of some that I've struck on, right? That's why I'm so heavy on RCC, with the exception of Hippo. I threw a lot of money into Hippo. I thought that was undervalued. I've thrown money into Affirm. I do believe that Affirm has a risk of going red tomorrow. It is red nicely at the moment also, which is worth noting. And it is sitting at just under 88 right now. It's definitely a lot lower than the 100 that it had been dancing around not too long ago. Let's go ahead and just out of curiosity, look at if you sold puts, the next option you could do is September 17th. But you might have some pain here. Let's see. How much are they? Let's see. If you were to buy a put, let's see. Let's sell a put. The bid-ask spread's about $200. Okay. So if you were to sell a put for September 17th, right now you would get about 7.55% in 9 days. That's not bad. That's because the market's really pricing in some potential volatility here. See, if you were to buy a put, it would cost you a good chunk of change to hedge your portfolio. And that's very expensive for what do I have? I think I have 50 options on here. It's very expensive for just 9 days. But let's see here. Weebs. Okay, so Affirm. Yeah, I have 5,000 shares, so 50. So if I wanted to fully hedge, you could go with 50 puts through earnings for September 17th. Cost you $35,000 though. That's crazy. That would take a substantial chunk here. That'd be 40, 427, 35.5. That's about 8.3%. Is what it would cost here. So in other words, the stock could literally fall 8%, and you may as well not have hedged. Well, but then again, you might have some more IV push, and then you could sell this contract back. But anyway, like this would make more sense if a firm was like $110 right now, if it euphorically ran before earnings. But the fact that it's selling down before earnings, it's not really so necessary, in my opinion. But yeah, I thought $100 would have been way too high going into earnings, so that was already taken care of. All right, so let's see here. We've got okay. Let's go ahead and jump on over to what do we have in that AMC news? Let me see if I can pull that up really quick. Okay, Adam Aaron on AMC. We're gonna pull that up. Okay. So we got 11 minutes to market close, and it's going to take a second here. Okay. We're going to find it. Yeah, thanks for the donations here about this crypto coin, but I'm not going to talk about other crypto coins until I have an opportunity to research them. It doesn't really motivate me to research them any faster. Okay, so Adam, Aaron, AMC. Let's go ahead and see. See if we could get anything, in the last, like, hour-ish, huh? Adam Aaron, ad campaign with Nicole Kidman, short squeeze. Oh, here we go. We got it.
A new commercial queued up and ready to roll. But before we show it to our viewers, why make this huge spend of $25 million when never before has a theater chain advertised itself?
Liz, great to be with you. And there are two reasons to answer your question. First, with 3/5 of the U.S. population vaccinated, Americans want to get out again. If we've learned anything over the last year and a half, we don't want to be trapped in our houses and our apartments, no matter how nice they are. And in the fourth quarter, there's an enormous slate of movies coming, big movies like No Time to Die, the 25th James Bond movie. We want to tell people and remind people how amazing it is to see a movie in a theater again.
All right, so we've got it queued up. Let us take a look at the We Make Movies Better ad starring Nicole Kidman. Here it is.
All right.
We come to this place for magic. We come to AMC theaters to laugh, to cry, to care. Because we need that, all of us. That indescribable feeling we get when the lights begin to dim.
That's good.
And we go somewhere we've never been before. Not just entertained, but somehow reborn. together. Dazzling images on a huge silver screen, sound that I can feel. Somehow, heartbreak feels good in a place like this. Our heroes feel like the best part of us, and stories feel perfect and powerful. Because here, they are. AMC Theaters. We make movies better.
Wow.
Wow. 1 minute long. It's going to unveil at the MTV Awards on Sunday night, but our viewers are seeing it here first. Nicole Kidman, great choice. How'd you get her? Can you give us the backstory on how an ad campaign like this comes together?
Sure. We've been thinking about this for years, but as you said in your intro, no theater chain has ever advertised itself. We've talked about what movies we're showing, but we've never talked about the theatrical experience itself. And coming out of the pandemic,
the light dim moment was great. It was really great. Just they gave you that feeling of like, oh, the movie's about to start. That was very smart. And they got a lot of money now. They got lots of money that they were able to raise. So this is smart.
Build our business back. We thought it was a great idea. We approached the two best talent agencies in LA, WME Endeavor and CAA, because we knew that to tell this story, we needed an A-list movie star to do it, or the message wouldn't resonate. And both agencies worked hard at it for us. Nicole Kidman was the top female on our list. We had a male choice as well. She said yes. We jumped at it, and we're so pleased that she's giving her talent to AMC.
Well, it's understated, but it's fabulous. I know it was written by Oscar nominee Billy Ray, who is amazing, right?
Can you believe that Nicole Kidman is 54 years old? Blew my mind.
Captain Phillips, Richard Jewell, he's written the screenplays for that. I do want to ask you, though, and Adam, there is no doubt, and anyone who...
Liz, can I
was just going to say, it's important to point this out. Yeah, okay, go for it, but...
Let me quickly tell you that we got Nicole, and to show you how involved she was, because this is her industry. She wants theaters coming back too. She said, I've read the commercial. I think it'd be better. I think you should get Billy Ray to rewrite it. She then said, and I've worked with directors for 25, 30 years, and here are the two best directors. You pick which one you want. So Nicole was in this from top to bottom. She found us our writer. She found us our director.
Adam, you are a survivor, and you have made it through an unbelievable 17 months. No dispute on that. But the company is under 11 billion in debt. Why spend a significant chunk of that, 25 million, on this ad campaign instead of paying down some of the debt?
Well, I don't want to be cavalier by saying it's only $6 million of debt, because $5 million of that that's reported as capitalized leases, which in the old days of accounting were operating costs. And we did at the end of the June 30 quarter have $2 billion of cash and liquidity on hand. So that brought...
It's worth noting when he says that, cash on hand, he always says or liquidity. In other words, like an open credit line. But they don't want to take more debt because that debt is expensive for AMC right now. So it's not really cash, like a credit line. It's worth noting that's not necessarily a bad thing. It gives them that fluidity, right? They can write a check for these commercials and these campaigns, right?
Debt down to $4 billion. But look, there are various ways to pay down debt. And one of them is to drive revenues and drive earnings. And we believe that these wonderful Nicole Kidman commercials, and there are 7 of them, by the way, they're going to build our revenues back much faster than if we hadn't reached into our pocket and make this expenditure.
Right. Adam, I want to talk about the stock. The stock has been an unbelievable performer year over year. I mean, year to date, it's up more than 2,000%. It's just amazing. But, you know, there was a recent sort of attempt by the so-called apes in the Wall Street Bets Reddit room to do a short squeeze, you know, a MOAS, mother of all short squeezes. You know, the stock is not where it was back in early summer. What do you think is happening there? And what would you say to the naysayers about AMC?
Well, that's such a big question. You know, my focus, as hard as this may be to believe, my focus isn't on the share price. My focus is on restoring this company to health. surviving this pandemic and leading us back to glory once again. Our shareholder base has completely turned over in the last 8 months. Our company was 80% institutionally owned, and now it's 80% retail investor owned. And those shareholders of ours, they love our company, they love movies, they love going to our theaters, and we're spending every waking moment trying to make this a strong, successful company again. And that's what these commercials with Nicole Kidman are all about. We think this is an important step in our playing offense. Again, not being on our heels because of COVID, playing defense, but going out there to say that AMC is strong and has a bright future.
Have you reached out to GameStop? I know in your last conference call, you had mentioned that there might be some type of partnership and that you wanted to do it, but you hadn't reached out. Have you now made contact with them, and what would that look like?
As you know, we've been deluged with great suggestions from our new shareholder base ever since they really gained control of the company back in April. One of them, they certainly enjoy their affiliation with AMC. A lot of them enjoy their affiliation with GameStop as well. And they've suggested that the two of us team up. We took questions on our last earnings call, not just from securities analysts, but from retail shareholders. That question came up. I said we made contact with GameStop. We have made contact with GameStop. We are talking, but it's too early to say what the shape of some cooperative marketing efforts might be.
Wow.
Please let us know when you do. We'd love to unveil that here. Good luck with the
Very
new ad
cool.
campaign.
Yeah, that's interesting. I mean, honestly, look, the TV commercial's great. The proof will be in the pudding, though. Is AMC going to actually be able to drive people coming out to the theaters? I think that commercial is a classy commercial. It's a very good commercial. I think AMC is doing a great service to their own business by running that commercial. And I also agree. That Adam Aaron is right. You spend money advertising to get business coming back again, and get people to come back to theaters, get people into that habit again, right? We do, by the way, have GameStop earnings coming up today. Those will be coming out tentatively estimated for 4:10 Eastern time. So we will be covering those. We've got Restoration Hardware, Lululemon, and some others coming out over here. So we'll make sure to go through earnings shortly here. We have about 1 minute left until the closing bell. So let's go ahead and do one last final check to see how the market is moving right before the close. So let's see what we got here. We've got support.com all of a sudden going parabolic right into the end of the day. Look at that run right into the end of the day here. Now all of a sudden up 17%. Lots of momentum coming into support.com. Hippo up 4% again. Let's go. Printing tendies here. This is one of the biggest purchases I've made recently was Hippo on Friday, and it has just been printing. So that's really, really awesome. I love that. Of course, can't always win, but right now, feels good. You've got 15 seconds left on the market. Lots of red over here. Clover, Skills, EXP, lots of SPACs. Real SPAC disaster. 8 seconds to go. We've got Affirm down as well, just under 88. And here's the bell.
It's down more than 1%. As we get the bell there, we do have a trio of declines down 0.
So we are down 0.2% on the Dow, S&P down 0.14, NASDAQ down 0.57, and Russell down 1.1%.
Welcome to Closing Bell. I'm Morgan Brett.
Yeah, full on red day here. Take a look at this Matterport chart. Just all of a sudden had a little bit of a buy here right as the market was closing, or right into the fell into after hours over here. But Matterport did trend down today, down just a little over 1% on the day here. Did briefly break that 1568 support line. We've actually had this drawn for a while. You can see it's pretty close to bouncing off of that a few times over here. 1, 2, 3, 4, 5-ish times on the minute chart here. We've got support.com still rallying here into the close a little bit, another 1% to the upside in afters. Looks like Ethereum's kind of coming back. Really seems like peak pain was somewhere around 8 a.m. this morning, right during the course member live stream. We, again, a lot of SPAC pain over here. Oh, let's quickly get the terminal up. There we go. We've got, Blink. Oh, is this too late? Oh, darn it. Okay. Let me try to get onto this. Give me 1 second. We'll get the terminal up so we can get those earnings, especially with GameStop coming up. All right, here we go.
Numbers as soon as they cross. Josh Brown from Ritholtz Wealth Management is still with us, and Gabriela Santos from JP Morgan Asset Management is joining the conversation as well. But first, Mike Santoli, we go for you. We go to you and your take, especially given the fact that we have had some commentary, particularly from some of the industrial names over the last couple of days, raising further concerns about things like inflation and supply chain issues. And then, of course, after the bell today, another focus with some of these names on retailers as we come into the holiday season. And there's concerns there, too, about supply chain issues.
Yeah, Morgan, I think it's reinforcing a little bit of nervousness strictly around profit margins, whether we've seen the peak, not just for earnings growth rates, but for the upward earnings revisions that have been so strong and so supportive of the market. So that to me is the background music for what's been happening this week. Are people basically saying the cycle looks like it's in a stutter step. We're going to have to wait for a reacceleration. Meanwhile, Fed taper and all the rest. We had 11 million job openings in this country at the end of July. That was reported this morning. And so that just shows you that it is a supply problem for jobs. It doesn't seem as if the Fed, in terms of its taper, is necessarily going to have an impact one way or the other on demand side, which doesn't seem to need that much help. So I think all that stuff is in the mix. Market is just softened up a little bit under the surface. I feel like it's a lot of stocks resetting. It's a little bit of a defensive tone. I don't want to extrapolate much beyond that. We're still up 20% year to date within 1% of the highs.
Gabriela, what's your take on the likely returns for U.S. equities for the rest of this year?
Well, we do expect a bit of a consolidation here in September, October. There are a lot of issues that need to be resolved around whether the supply-driven slowdown is something that is indeed just temporary. For that, we'll have to see what happens.
Okay, while they talk about supply here, I just want to mention that we do have GME ready for earnings. We've got them up. We've got Lululemon up. We've got Restoration Hardware up. Lulu, we have options implying an 8.4% move in the market. GameStop, a potential 20.2% implied movement in the market. Restoration Hardware, a 13.1% implied movement. Big movements expected here. So we are expecting Restoration Hardware and Lulu to report first, and then we'll be going to GameStop earnings. In the meantime, let's go ahead and take a peek here at just the after hours, see what we've got. Lucid, by the way, down just under $19. Open door under 19. Robinhood barely closes above 40. Oh, lots of pain over here. Looking for, let's see, Palantir, another good position of mine, sitting at that 25 level. We've got, where's Enphase when you need it? There it is, Enphase 163, popping back up a little bit in the after hours. Still waiting for a little bit more pain. Somewhat, as much as I'd love to see a big rally here, I also wouldn't mind a buying opportunity. And I have to say right now, we're kind of in the middle here. We're in this like teeter land. It's like, okay, which way are we going to go? We've got Hippo down about 1.26% in the after hours, but up 5.45% on the day. It rallied into the close. $6.38 on Hippo. This is really, really good for Hippo. I really think they oversold. It's one of the reasons I've got like 500K in them, which is very, very exciting. I'm a little bit, I'm going to be very transparent. I am nervous for Affirm tomorrow. I think Affirm's earnings are going to suck relative to the expectations and what will be the truth when Affirm ends up showing actual numbers from their partnership with Amazon, which may not actually come to fruition until Q1, or we won't hear about them until Q1 when we get Q4 earnings in Q1 of 2022. So Affirm's going to be a game of patience. Made some good money on options already on Affirm, so I'm happy about that. This run here on support, very, very interesting run here right towards the end of the day, evaporating a little bit in the after hours. All right, let's go ahead and check. We've got earnings should be out. GameStop. GameStop earnings come out. We have net sales of $1.18 billion. That's a beat on net sales. $1.18 billion on GameStop. The estimate was 1.12. That is a beat on earnings. We had a loss of 85 cents per share, an adjusted loss of 76 cents per share with a loss of 61.6 million. So that is a beat on the top line earnings for GameStop. I don't have the expectations for for the bottom line on GameStop. I'm going to get that here. Quickly, though, Restoration Hardware comes out. Whoa, with an adjusted EPS of $8.48 versus estimates of $6.49. That's almost a $2 beat. That's a very big beat on Restoration Hardware. Big bottom line beat on Restoration Hardware. You've got top line revenue at $988.9 million. Almost at $1 billion of revenue. They have increased their fiscal year revenue projections to 31 to 33% of an increase versus the 25 to 30% expected. They beat revenue, beat EPS, beat on forecast. That's a triple beat on Restoration Hardware. We've got a beat on forecast for Lululemon coming in at $6.19 billion versus $6.26 billion versus the $5.83 to $5.91 expected. That's a beat on sales outlook. That is a beat on net revenue, $1.4 billion forecasted. We've got net revenue in the second quarter was a beat, $1.5 billion versus $1.33. Adjusted EPS looking forward to Q3 is a beat. Q2 EPS, I'm not exactly sure what the estimate was, but so far Lulu looks like a big old beat. Restoration Hardware was a big beat. A margin over 25% of Restoration Hardware. That's incredible. The expectations, okay, GameStop loss per share came in a little bit higher than expected. We were expecting a 67-cent loss per share. We came in at 76. So really, Lulu and Restoration Hardware absolutely crushed it here. GameStop beat revenue, but didn't come in as well on the bottom line as expected. Let's go ahead and take a look. Yeah, GameStop falling only slightly here, 0.89% in the after hours on this. If we go to Restoration Hardware, we're actually down 2.88%, 3% now on an insane beat. I mean, we have a massive, massive triple beat on Restoration Hardware. I think partially this could potentially be because of, it has been running leading into earnings. It ran up to 744 at one point. This has just been an absolute crusher of a stock. Let's go ahead and look at Lulu quickly here. Lulu up 8.4% in the after hours on also a triple beat. Lulu's getting the love that Restoration Hardware is not. Restoration Hardware had a very nice triple beat as well, just like Lulu, but Lulu going up substantially. Restoration Hardware, Lulu up 8.3%, Restoration Hardware down 2.3%, and GameStop missing on that adjusted EPS, dropping about 1.3%. Those are really incredible earnings. Really, really, really incredible. I mean, just looking at Restoration Hardware, the fact that people are still spending this much money on expensive furniture, on overpriced furniture, absolutely blows my mind. It's one of the reasons I could never bring myself to actually buy Restoration Hardware stock, because I don't buy Restoration Hardware products, because I think they are a ripoff. I'm sorry. I'm sure they're high quality and they're great and all this, but it's freaking furniture. Stupid. Sorry. I'd rather buy stocks and not Restoration Hardware. But I have to say, they've done very well. Honestly, maybe I should take my spite for expensive furniture and buy Restoration Hardware, because they've figured out how to rip people off. But then again, I don't want to be coming across as ripping people off ever. So I don't know. I don't own it. I won't own it. I don't want it. But good job. Good for Restoration Hardware. They have figured it out. Lululemon, very good job here. And we have, again, a beat on GameStop. Let's go ahead and look at their report here. All right. So we have, this is the GameStop report right here. Let's take a peek. All right. So second quarter generated net sales of $1.18 billion compared to $942 last second quarter. It's good growth. We've got ended the period with cash and restricted cash of $1.78 billion. Okay. Invested long-term growth initiatives, whatever. New fulfillment center you guys leased. Okay. I want to know about what you're doing to get people in the freaking store. Cautionary statement regarding blah, 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 blah. How are their spend going here? Net sales up, selling and administrative almost the same. So it's not like they're advertising more. Cost of sales ticked up with more sales. That's okay. That's about the same ratio, roughly, without doing the calculation right now. I want to see how they're bringing people into the store. Can we get some? I mean, we'll have to see in the earnings call, but I really want to know, what are you all doing to get people to come into the store? That's the big question for me, because SG&A is roughly the same. I don't think they've figured that strategy out yet. And that's been pretty par for the course for GameStop, is they kind of, with Ryan Cohen, have been a little quiet on their strategy here for what to do. And they really invested in a long-term growth initiatives that include expanding company's product catalog, enhancing fulfillment capabilities and technology, and adding talent. So basically, hiring people, investing in growth initiatives, which we have no freaking idea what that is. But they do include expanding the company's product catalog, which is that a tease to NFTs? Is that a tease to like doing some cool things? I don't know. Let's see. We have fulfillment capabilities is really just so you could ship stuff faster. So you're trying to play catch up to Amazon. Pembroke Pines, Florida, new customer care center. What do you need a customer care center for? You need customers. Is that wrong to say? Yeah, I feel like that's like, I don't know. I mean, maybe. I mean, I guess you got to take care of the customers too. But I mean, I don't know. Maybe it all has to do with NFTs or something. Maybe they're going to sell us. Who knows?
Said categorically they were done allowing corporations to put their logo on at least the products that they themselves were selling. So I get what you're saying. Real quick on GameStop, I don't think they have to be better at selling at selling copies of video games than or even peripherals like chairs and gloves. And I'm not a gamer, so forgive me. I think all they have to do is demonstrate like a minimum competency. And if they can build up hybrid the way, for example, Gap Stores is right now, the way historically Lulu has, obviously the way that Best Buy has, like if they can get to being perceived as having that level of competency at doing that kind of seamless, sometimes I go to the store, sometimes I order online, sometimes I do both, that would be enough. I'm not saying it justifies the current market cap, but this has never been about justifying the current market cap. They just have to demonstrate competence. So it'll be interesting to see if they can do that over the next year. And a lot of money is parked in this stock waiting to find out. So I think I agree with everything Michael said. And I really think that that's what's going on today.
Yeah, 4,500 stores, I'm not sure is the way you would start to create the video game virtual retailer of the future, but that's where they're at. Josh, before you go real quick, that cheer before 4 o'clock that went up after you were introduced, it was because Derek Jeter became a Hall of Famer at that moment, and the guys were reacting to that. It wasn't your intro, but it might have been both, actually. What do I know?
I think it's very hard to describe.
I'm just going to share my unsolicited 2 cents about GameStop. It's just my opinion. You got to get people into the freaking stores. In fact, just an idea. Partner with Dave & Buster's. Dave & Buster's has a crap ton of locations. You could have like a little kiosk that sells video games right inside Dave & Buster's. People are already gaming. GameStop and Dave & Buster's. That combination makes sense. In my opinion, a GameStop like kiosk or whatever inside AMC, it doesn't make as much sense. When people are gaming, sell them game stuff. Like that's something to do. You got to figure out if people aren't going to come into your store, how are you going to bring the games to where they are? How can you sell a PlayStation and an Xbox to somebody who's already into gaming? Like arcades and things like Dave & Buster's, in my opinion, that's your combo. Combine your square footage, partner with them almost like permanently. Like you don't need as many stores. Sell them inside Dave & Buster's all the time. It's win-win. It doesn't take that much room, especially if you sell, digital downloads or consoles, or you provide customer service there. Then you don't need a customer service call center in Pembroke Pines, Florida. Like just help people when they come into the store. That's the point. You're trying to get people in the store after all, right? I don't know. Like get some big ideas here. I'm waiting for those big ideas for GameStop, because like if GameStop's only thing is please come back to our existing GameStop locations to buy a video game you can download online, they ain't gonna make it. They're just not gonna make it if that's all they got. They got to think bigger. They got to sell people games where people are going. Like I said, restaurants, Dave and Buster's, places where people are engaged and fun. Bring the games to them, sell them there. Then I don't know. Do you get into the NFT space? That's an idea. Now you're competing with Visa and Square. Maybe do you partner with Visa and Square? How could you gamify NFTs? Can you work with DraftKings to get into sports betting and gamifying NFTs with sports and sports gambling? Right? These are the things we got to do. Like, in my opinion, looking at this GameStop, what is this? Entered into a new lease of customer care center. I don't care. You don't have enough customers. Entered into a new 530,000 square foot fulfillment center in Reno, Nevada. So now you're trying to tell me your goal is to compete with Amazon? You gotta be kidding me. It ain't gonna work. And then you've got a low interest loan from the French government from their pandemic assistance. I don't care. Okay, investing in long-term growth initiatives. I want growth now. How hard is it? Sell games where people are. And expanding the product catalog. That might be a tease to NFTs, but I mean, like, what are you going to sell? Action figures at GameStop? Like, are you going to turn into like the what's it called? The hobby store nobody goes into to go buy trains? All the ones we used to go to when we were little kids to see the choo-choo trains drive around the top of the store. It's like, oh, Daddy, I want that choo-choo train. Like, come on, man. Like, get with it. So I don't know. And maybe they got big plans coming, but it's just hurry up already. Like, give us some hope. Sorry. GameStop rant over. Okay. I'm done. Next. All right. All right. I guess I got to go back. Who's this? Analyst Performante. Dude, thank you for the $4.99 or whatever you pay per month to be part of this member chat. That does not give you the right to spew bullshit, garbage, lies. I do not have short positions on GameStop. I've been extremely transparent about my portfolio on AMC. I'm bagging on GameStop because I'm waiting for some hope and I'm trying to give them ideas. Maybe through my rant, they'll actually listen and do something that's going to increase their revenues more. That's what we need, not this crap in this investor presentation. If you can't give a company you love tough love, then you're nothing more than a faker. So get out of here with your bull crap. All right. So where were we? Back to the post market. Let's see here. Support.com is up 4%. It's crazy. They're still running after going 20% in like the last few minutes of the day here. Run. This is incredible. Restoration Hardware went green. They deserve to go green. They really deserve to go green there. I like that. That's pretty good. We've got United Whole. Yeah, okay, that's better because Lulu is going up like 8-9%. Yeah, look, they're 49% right now. That's good. But Restoration Hardware, let's see here. Yeah, Restoration Hardware 3.35. That's good. That I like. Okay, so let's see here. You've got what else here? Okay, now we got Matt Hammond who says I didn't even mention earnings. What did I read when I read Bloomberg reading off GameStop earnings? Was that not talking about earnings? Their earnings didn't kill it. They had more earnings than the second quarter of last year. Congratulations. Yay. It's 2021. People got 3 sets of stimulus checks. I would God only hope that their earnings would go up a fraction after a year. But their adjusted EPS still lost. It missed expectations. We need bigger ideas at GameStop. I hope they're cooking. I really do. I want GameStop to succeed. I want GameStop to go to the moon. I'm just not seeing it yet from management. That's it. All right. So, United Arrival. These are all boring. Okay, let's go over here. So, Boston Beer. Why? Why did they report today? Hold on. For a 7% move on Sam Adams, Boston Beer, Sam, there had to have been some kind of report here. Boston Beer. Let's see here. Okay. Individual news. Boston Beer. Oh, okay. Okay, hold on. Here's why Boston Beer's getting hit. Okay. Ooh, okay. So Boston Beer withdraws full year guidance, shares plunge. Boston Beer expects full year 2021 EPS to fall below previously reported estimate, but does not give an estimate. Oh, this is like, remember when like who makes Topo Chico, by the way? Who makes Topo Chico? Oh, Coca-Cola. Okay, that's right. But so I'm a big fan of Topo Chico, and there's been this whole like phase about like hard seltzers and alcohol seltzers and sparkling water and blah 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 blah. And a Boston Beer was seen as one of the seltzer related like kings, and everybody's like, oh my gosh, we got to get into Boston Beer. I don't get into food and beverages because the recurring revenues are like very very difficult to keep up. But anyway, Boston Beer withdrawing 2021 fiscal year guidance. Boston Beer expects to incur seltzer-related inventory write-offs. That's not good. Shortfall fees payable to third-party brewers. That's very bad. There will be continued uncertainty about hard seltzer demand trends for the rest of 2021. EPS falling below earlier year guidance. Shares fall 7.3%. What is this? So hard. Let's go to trends really quick. EPS. Let's see. Okay. So no, we want to do a hard, or I'll just put a seltzer. Let's just put seltzer in Google search trends. They haven't fallen that substantially, but they've definitely stopped growing as much. So you get these spikes. Look at that. You get these spikes here, and this dotted line, I'm not really seeing that as much here. But anyway, over the past 5 years, it comes in like waves. That's one of the dangers of fads. It's one of the reasons, and I'm not saying it's a fad, but it's one of the reasons I haven't gotten into the Scrubs company Figs, because I'm worried, like, what if it's a fad, right? You know, I mean, you're still on this net positive trajectory here. Kind of like Lemonade Insurance. See, look at that. I like that. Lemonade Insurance. That's nice. That's very, very nice. Very nice. I like. Okay. So, ouch on Boston Beer. Let's go see here. Yeah, I know in the middle of a fad, everybody's going to tell you it's not a fad. I'm sorry, I had to say it. Look, I get it. Figs are quality. Nurses love them right now. They sell out like crazy. There will be another company. And I don't know when that transition is going to come. And so that's the only reason I'm not investing in them. How did Boston Beer go from a $290 stock, even $365 before the pandemic, to $1,349 in April? Holy moly. That's like a 6x here. No, not quite. 300. No, more like a 4.5x. 4.5x. Really, really nice growth. But holy smokes. I mean, the collapse here. Oh my gosh. Yeah, well, look, I'm transparent about that. And I get it, Mr. S1 saying, I just don't understand your fad clothing line. I get it. High quality, you love them. They sell out. The colors, they're sexy, they're beautiful, they're great for TikTok. I get it. Point is, clothing brands tend to have trends associated with them. And I am nervous that if I were in Figs, I would not be able to identify the inflection point. Whereas if I were a doctor, I would be much more capable. Now, if I had a doctor spouse or a really close doctor support network and I could talk to them about Figs all the time, then I might be more interested. But I think that would be a prerequisite to really investing in Figs, in my opinion. I would really want to track the impression on the ground for a company like Figs. That's it. I'm not trying to bag on your stock. All right. So, I think I need more coffee. Yeah. You think Atarian would be a decent place similar to Hippo? It's had a massive sell-off. Atarian. Let's see. All right. Atarian. What is this? So this is not a SPAC. The fact that this thing has gone down to $1.49 without any sort of signs of a split here is very interesting. Now look at this. You're a penny stock that ran up to almost $50 and has collapsed here. This is a little different from the SPAC world. But yeah, you're right. August 20th, we had some real pain here. What the heck is this company? ATER. I'll look really quick. Okay. Oh, Boston Beer just got wrecked. Absolutely wrecked. Okay, ATER. Okay, I don't know anything about this. Security description. What is this? So ATER provides consumer product platform. A company offers home and kitchen appliances, health and wellness, beauty, and consumer. So what is this, like the Walmart of the internet or something? Tech-enabled consumer product. Oh, tech-enabled consumer product company. Like smarthome.com or something like that. Join our shareholder perks program. Okay, I don't know why, but I get nervous when the first thing I read on a website is join our shareholder perks program. Are you selling products or are you selling the stock? You know, it's like when you go to apple.com, look, here's our phone, our product. This is what we want you to buy. This is where we make lots of money because it gets you into the Apple ecosystem. This is the next most profitable thing. This is the next most profitable thing. And then let's sell you a watch too, because we want you to have everything. And then we're going to sell you the least profitable things like Apple TV, right? And then here are discovery, right? Like that makes sense to me. Join our shareholder program. It's just a red flag, okay? I'm not saying it has to be a big red flag, but it is a red flag. You know, all right. We build, acquire, and partner with brands. You build brands or you build products. Harnessing proprietary software and agile supply chain. What does that even mean? Sorry, I get very skeptical. Like if I'm going to invest in something, build. What do you build? Today, purchasing decisions are based on search results and reviews, not on brands alone. We make products for the empowered consumer. What does that mean? We analyze data points. Okay, so does Google search trends. Okay, our ongoing data analysis allows us to manage a product with precision once it's in the market, delighting customers and achieving bestseller rankings along the way. What do people pay you to post reviews? Product research, supply chain, customer service, fulfillment, sales automation. Okay, so they help you sell your crap. That's what I'm gathering here. They help you sell your crap. We built something great. Want to see mergers that are okay. They help you maybe find investors or whatever. This is a support company for people who want to sell their crap. That's what it is. It's like a data and service support company for you to sell your stuff to Amazon or whatever is my guess. And some of the brands they've partnered with are 14 of them. 14 brands, 300 products. Like the Squatty Potty. Hey, folks, they will help your Squatty Potty get good reviews. Well, so this one better be good reviewed. It's going to be. It has to be. Otherwise, they wouldn't feature it, right? Right? Squatty Potty. Hey, look at that. Squatty Potty. They got sponsorships, good reviews. It's a good testimonial. Okay, good. Appliances for life. What is this? Home Labs? You're going to sell me a box? Okay. I've always wanted a little white box. Oh, the spiralizer. You never know when you're going to need to slice your cucumber. God, that sounds wrong. Oh, jeez. Okay. So they help people sell their crap. Okay, got it. Let me look at their finances. Yeah. So where were we? Financial analysis. Okay, let me just look here really quick. Revenue. Okay, I mean they've grown nicely. 240 mil estimated for 2021, 286, so 18% growth for next year. Okay, they're still expected to grow. That's nice. What's their profit like? Not. Okay, they're definitely losing money. I don't know that they have a path to profitability. That would be my biggest concern, is getting a path to profitability, which is true of other companies as well, especially insurance companies like Lemonade and even Hippo. Right, but I think that it's a lot easier to understand the Hippo being undervalued because of storms in Texas and that being sort of a one-time event and the future of insurance, which we did a whole video on, versus them trying to convince brands to work with them. I think probably the biggest thing that makes this very scary for me is they have 14 brands they work with. That's it. That makes me nervous. They said it themselves. Okay, they said it, not me. 14 brands, and one of them is Squatty Potty, and the other one is the Cucumber Cutter. I would want to see some real growth here in brand adoption, and then I would go through the earnings and sort of determine, are brands actually succeeding with them? Like, can I see that the sales of Squatty Potty are going up? I don't know. I mean, that's the first one they pitch. So, Squatty Potty. It's very trendish, huh? Squatty Potty's kind of declining in trends, right? So I don't know. Does Squatty Potty need a bailout? I don't know. And yeah, it's like Shark Tank. There you go. Yeah, Lemonade. When they announce that car insurance, I think it's going to be a catalyst. I think that's a moment. Poshmark's been another one that's just gotten destroyed. Okay, everybody's now talking about Nicole Kidman. All right. So, yeah, Posh has gotten wrecked. Yeah, it's rough. I mean, it just broke through everything here. I mean, this is just pain. Let me look really quick. All right, let's look at Posh just briefly here. Financial analysis. Oh, yeah. Keep in mind, if you like the Squatty Potty, you'll love getting up to $70 for free with Public by going to metkevin.com/public. They won't buy or sell your information. They don't use payment for order flow, and you can get it free up to $70 by using the stock trading platform Public. Go to metkevin.com/public to sign up. And if you like Cucumber, well, never mind. There are also courses linked down below that you could use a coupon code on. All right, where were we? Okay, so revenue for Posh, we're still expected to grow at a clip here of 26% for 2021, 22, 23. So we're still expecting growth on Poshmark, and we're expecting profitability in 2023. Valuation based on 2024 estimates puts us at about 50 times earnings, a little under 50, like 47 times earnings for 2024. Poshmark on a search trend, a little bit of a slowdown here on searches. Why it ran, I think, is the big question. Did it run out of momentum? Well, no, it basically just evaporated after IPO. That's interesting. Yeah, it's very interesting. Okay. All right. Yeah. The cucumber spiralizer. All right. So Boston Beer got wrecked. Purple. I mean, look, I got into this thing at 18. I sold it at like 34 or something like that. But boy, oh boy, the fact that it ran up to 40 and then plummeted right after that, that's a bummer for them. That's a bummer for Purple. You have Redfin rotating down again, almost under 49 now. AMC goes down despite announcing, I thought, what was a really incredible commercial. Stock market still punishing AMC here, down 0.9% on the day, down 0.89% in after hours. That's despite the run. Look at the momentum that we had after the talk. Look at this. This is a classic momentum curve on the minute chart. I mean, you see this on the hour chart all the time and on the day chart, but look at that burn, that sellout. You had a trader run on that Fox News interview and then a decline here. We've got Matterport rotating down as well. Support.com doing well. And that's about it. Wait, and then Lulu did well too. Restoration Hardware up 1.72. Look at that Lulu run though. 12%, folks. There you go. And Lulu's actually fallen quite a bit going into earnings here. So very, very nice movement here on Lulu. Very, very good job. All right, folks. Well, I think we did well. Make sure to get your free stock. Make sure to get your course coupon down below. Moved it to the 24th because too many people were reaching out saying, Kevin, I want to buy your course only if you don't become governor. Which is, I still laugh about the misaligned incentives there. I want to fix California really badly. But anyway, thank you, folks. I appreciate you. We will see you, I don't know, in like 20 minutes when I post another video. See ya. Bye.